Hello, everyone, and welcome to DripEcho, a show brought to you by Waterdrip Capital that delves into the world of cryptocurrencies and blockchains. I'm your host, Joey Chins, and I will be guiding you through the latest techs, investment opportunities, and industry trends from a VC perspective. So today, we are honored to have Aki with us, the founder of the dlcBTC and the serial entrepreneurs. Aki previously founded the AI-driven market companies MarketMuse and had a great success in that space. But in 2023, he ventured into the crypto world, launching the dlcBTC, a decentralized and more secure DeFi solutions built on Bitcoin. So today, we will be exploring her entrepreneurial journeys, the innovation behind the dlcBTC and its future directions. So hello, Aki. Would you like to say hi to everyone?
Yeah, thank you for doing this. It's a pleasure.
Thank you, Aki. Firstly, thank you so much for joining today. I know you are a very successful serial entrepreneurs, and your previous project, MarketMuse, did really well in the AI-driven market space. So I'm curious, how did your entrepreneurial journey start? What was your background? Tell me more about your university and your major.
Sure. Well, I guess a couple of things. So my father's a scientist, and we were born in Hungary. All of us are from Hungary, but we moved to the U.S. in 1991 to Boston because my father was doing research, actually nanomaterials, nanomedicine type research. Actually, he even later taught in China, and he worked in Beijing and kind of all over the world. But we were a scientific household. And I also had kind of an entrepreneurial side to me. Even when I was a kid, I was like selling bubble gum to friends when I was like 10 years old or something. I was selling jokes when I was 5 years old. At age 15, I started one company. At age 18, I started something in college. So I was always starting things, but I always wanted to combine kind of science and entrepreneurship. And I went to university. At 15, I went to community college to do computer science. At 18, I went to university to study business. So I knew that I was going to always be kind of involved in these two things. I have been writing code for almost 30 years now. So I was always into computers. But long story short, in 2011, I was at a venture capital fund in Boston called OpenView. And I was looking at AI, machine learning, big data, and also marketing automation. And I wanted to combine the two, and I wanted to start my first kind of software company. So in 2013, I started MarketMuse. And basically, I wanted to do something different that nobody had done before. So I worked with some scientists, and I invented a way to optimize web content, like articles for search, for SEO. And that technology became the best way to optimize search for SEO, basically. And we built this company from it. And I raised over $10 million. And basically created software that is still in use by many of the largest publishing companies like CBS Interactive, the Home Depot, and so on. So that was kind of my first. It was an 8-year project for me, from 2013 to 2021. I built the company to about 50 people at its peak. And just a great learning opportunity. I also made a lot of different mistakes. So it was very much a wild ride.
Okay, so that's really interesting. I mean, going from AI to the Bitcoin space seems like quite a bold and innovative move. So after MarketMuse, so what made you decide to dive into Bitcoin and DeFi? How did you first get interested in cryptocurrency and Bitcoin?
Yeah. So even when I was a kid, I was like trading stocks and reading about. Even at 15, I remember I was reading the Motley Fool newsletter, and so on. And so I was always interested in that. But I thought for my second one, it would be interesting. I heard of Bitcoin in 2011, but I did not focus on it then. And I heard of ETH in like 2015, also did not focus on it. But I thought crypto would be interesting because it takes finance, fintech. Fintech traditionally has been very hard to get into because banks are so heavily regulated. So I thought this was a very interesting way to get into that industry. And I also thought that it can really help a lot of people, especially, in the US, in the US, we're privileged. But for example, Hungary, where we come from, they don't have so many, like the banking system is not as strong. And so I had that experience that in some countries, in many countries, the financial system is not that great. And so if we have something running on software, that would be better. And then the way I actually got into building on Bitcoin was actually very interesting. I was working with a Hungarian engineer and helping him do kind of BD because I didn't have any, like when I was very new into the space, I didn't have any ideas. And I connected him to my friend, and he ended up hiring him to build the Chivo wallet for El Salvador. So my friend built the wallet that is used by, several million people in El Salvador. And that had Bitcoin. And then I started thinking, okay, so if all the El Salvadorians can have Bitcoin, then everybody in the world can have Bitcoin. Then what can we do when you have Bitcoin? Well, maybe you want to take a loan on it or invest it. And then I started getting into DeFi and Aave and things like that. And I noticed that you have to use wrapped Bitcoin, and it just didn't make sense because if you take the most decentralized, most safest asset and you send it to one place, and then you use it in DeFi, which is also decentralized, it just doesn't make sense to centralize it. And that's when I started working on, actually a friend of mine told me about DLCs, and I started working on it. And then that eventually became DLC Link and now dlcBTC.
So why not continue in AI space? What do you see as the biggest difference between starting a business in AI and in crypto? Do you ever regret shifting your focus to crypto, especially considering the explosive growth AI has seen in recent years?
Yeah, it's funny. Well, I do have terrible timing because I should have done Bitcoin first and then AI.
Yeah.
Definitely, I was a little, but hey, you never know. MarketMuse, we actually built an LLM in 2018, so several years before OpenAI. And I threw a couple of $1 million at the project, but it was not enough to make a really good LLM. But we did have our own. So I was very early, maybe unfortunately too early in that. And I think AI has a lot of promise, and it will be there, and there's a lot of projects. But I don't regret it. There's a lot to be built in both. And one of the reasons I left AI, or I got a little disillusioned, is it is also very centralized. So in the sense that if you are a large company, you can buy a lot of servers, you can train AI, and you have all the power or you have all the data. And so there's a natural tendency towards centralization. And I actually thought in crypto, there would be an easier opportunity because it is more, the focus is being decentralized. So if you figure out something, there's always a place for you versus the minimum requirement to start an AI company is going to get higher and higher.
Yes, it sounds like the transitions was quite natural for you, whether in AI or crypto. Both are cutting edge industry right now. So if you were give advice to a young person considering career development or just the potential to make money, so which industry do you think offers more opportunities?
Well, I always think to build a startup, you need some unfair advantages because building a startup is really hard. No matter how you do it, they're all hard. And it's normal when you're an entrepreneur, it's normal to feel like frustrated because it is difficult. So the more advantages you have, the first one, I was already looking at the AI space from the VC side. It was kind of new at the time, 10 years ago. My scientist friend that I was working with, he has a lot of AI expertise. So I went in that direction. With the second one, I happened to meet more people with Bitcoin expertise. but there's opportunity in both. And the only thing I regret, honestly, is not that I didn't build a company in Bitcoin first. What I regret was when in 2011 I had $3,000 and I was thinking, should I buy a Bitcoin or should I invest in myself? And I only invested in myself, and I should have done maybe 50-50, because you should diversify, because we actually don't know. We only know the past. We don't know the future. We don't know in 2 years which one's going to be big again. Crypto, AI, maybe something else, green energy, maybe, who knows. And it's just good to know a little bit of everything and try a little bit of everything, because there's sort of wisdom in being open-minded. And definitely as an entrepreneur, I had like tunnel vision. I was only looking at my company. And now I realize I need to be more broad and look at other things. So when something new comes out, we were at Token last week, Solana. Cool. Maybe Solana is going to be a big deal. Maybe not. I don't know. But let's have a little Solana, a little, Cosmos, a little bit of everything, because, we should not be ideological, because nobody knows exactly what will happen in the future.
Next, I'd like to dive into the entrepreneurships from both the investors and founder perspective. So as investors, I naturally tend to focus more on the potential return on investments when evaluating most projects. But what about you? How do you approach it from the founder side? Entrepreneurs and investors often have different mindsets. What you said about the entrepreneurial mindset really struck me. I feel like for many entrepreneurs, there are two approaches to building a company. One is to treat it like a business, and the other is see it as a mission, something bigger. So for you, what is dlcBTC? Is it about making money or pushing the boundaries of technologies?
Yeah, it's a very good point. I mean, I will put it this way. You can do either one. It's a little bit maybe personality and strengths. I always wanted to build the companies that use new science, because I wanted to build something that is differentiated, so that it's not just a copycat. I think there's very little value in creating a copycat. I mean, look, there are some industries where you can create a copycat product and maybe still make money. One example is CRM systems. There are like Salesforce is a big company, but there's so many different CRM systems, for example, or like DocuSign, electronic signatures, or like there are spaces where you can always make something new. But then after a while, there's consolidation. And if you're doing exactly what everybody else is doing, chances are there will be a bigger fish and they will eat you. So I always found that both of my products, both of my companies have some unique aspect that is rooted in basic science, basic research from university that makes a better product. And that has been my approach. Some people, there are different types of businesses, and you could also make, a business process outsourcing company and do a good job. And, some people might have strengths in that domain. But for me, I always thought that adding a little bit of that scientific angle makes it defensible. And even for this product, now today, there are many wrapped Bitcoin products. And there's new ones pretty much every month or whatever. But we are the only wrapped Bitcoin product that uses self-custody and uses Bitcoin L1. Everything else uses one centralized custodian or a bridge. And Bitcoiners know that neither of those are safe. And so I feel very confident even now that, we just had Coinbase CBBTC come out. Coinbase is a really big company. They're very powerful. But still, we have an advantage against CBBTC because we are more decentralized. And so that's how we stay alive as a small venture-backed company.
But early stage funding is often one of the biggest factors in starting a business. So for a crypto project like dlcBTCs, do you think early capital is critical? And beyond the monies, how important are the resources that VCs bring to the tables? Is it really important for you about the VC set?
For the first 2 years, we didn't raise money. Either in company one and company two, we did not raise money much. For my first one, actually, my first year, I raised nothing. Second year, next 2 years, so year 2 and 3, I raised 1 million, and then I raised VC. For the second company, first year and a half, we only got some grants, and then we got some VC and went from there. So for, let's say, the first year and a half, it's okay if you don't raise any VC. It's good to do consulting projects or have grants or have some kind of revenue to research into a space. I call that like research and development revenue. When you get a grant, like a consulting project to build something for somebody, that's what we did for both companies in the beginning. And then once you start to have a product, that's when you might want to raise venture capital. In fact, in the beginning, there's even flexible ways you can do it. You could be part-time on your job and part-time on your company, or you can have different like flexible arrangements, in the early days. But, once you take venture capital, the thing is, I think VC is great. I was a VC. Both projects have VC. I always would want to use VC. And finding a really good VC or finding several really good VC partners is great because they push you and they make you move faster and they have more resources. So I think it's great. But I think it's good to not, like, in the beginning, you just have an idea and you just have to do research and have to validate it, talk to customers, build a prototype. For that kind of stuff, you don't need VC. You could just go and do it. Just go and do it. Go talk to some customers, go to some conferences, find a way to make the time. And then once you start to see a pattern and say, wait a moment, I have an idea and it's now very specific. And I have these people telling me they want it. And I have this engineer. And like, once it starts to come together, that's when I would suggest going for the pre-seed round. And that's what we did. And that's worked out, really well, because then also you get like, once you're, because in the beginning, in the early days, you pivot, both companies, the first 2 years, I pivoted, quite a bit, and just kind of focused on the idea. So if I would have raised money on day one, that would have made me basically like promise one thing and then deliver another. And I just don't want to do that. So yeah, I recommend kind of doing the research first, doing the homework, and then going to talk to VCs.
Yes. Oh, okay. So we have been talking a lot about the projects, but I'd like to dive a bit more into your personal experience as an entrepreneur. So when facing challenges, investor usually focus a lot on financial performance. As an investor, I have my own upside and downside in these careers. So my downside is probably making sure our LP don't lose money at the very least, covering the initial investment. So as a founders, what are you upsides and downsides? And I curious, do you ever feel the pressures to ensure that your investor don't lose money? How do you strike a balance between you ground visions and the practical need for returns on investments?
Yeah, I mean, look, being an entrepreneur, especially being a venture-backed software entrepreneur, sucks. It sucks really bad. So if you are doing it and the experience is really horrible, you're probably doing it right. That's pretty accurate. My first time doing it, it was horrifying up until.
Hi, Aki.
Sorry, there we go.
Yeah, that's okay.
My cut up. Yeah, about 5 years in, I started getting more comfortable with it. But even now, now I have been an entrepreneur for over 10 years, venture back, and still I have everyday doubts and fears and concerns. I'm just a little more used to it. So that's normal. And most people, most people don't want to start companies because it's a guaranteed, you're going to feel a lot of uncertainty, a lot of doubt, self-doubt. Are we doing the right thing? Where should I be spending my time? but that's like the downside. And if you can kind of get comfortable with that, and if you're the personality type where that doesn't affect you too much, then you get the upside, which is learning. You go on a great adventure and you learn so much so quickly, and you have an amazing experience. And it's a learning where you're measured, like you said, you're measured by the amount of value you create, the amount of money you make for investors, the amount of outcomes you have for the customers, which is, I would say, the most important thing we try to do is get very good outcomes for our customers and serve our customers well. You see your team develop, and then you see your personality and your person develop. I think that's really cool. And that's why I really wanted to get into it also for personal development. If I'm too focused on one thing, like of course we want our investors to make money, but the most important thing, I want the customers to be successful, and I want them to not just buy once, but I want them to be repeat buyers, repeat customers. Like that is, you can only build a business on repeat customer. And so even in the short term, if we make decisions that seem like, they're maybe not the right decision or whatever, questionable, is if we're optimizing for customer value, I think in the long term that always plays out. And so there's a natural. I have been an investor and I have been an entrepreneur. There's going to be always a natural kind of tension or dynamic between the two viewpoints. But I think that, as a founder, it's my responsibility to focus on building the greatest value over the long term, even if in the short term, we're going to do things that maybe the investors don't like or don't agree with, but that's one of the things I've learned from doing this.
Okay, so lastly, I'd love to dive deeper in the dlcBTC itself. So if you had to sum it up in one sentence, which is the dlcBTC all about? What the ultimate goal you want to achieve with this project?
Yeah, in one sentence, I love it. So we're building a safer wrapped Bitcoin that is using the entire Bitcoin chain to secure the asset, to secure the Bitcoin asset that is then wrapped to Ethereum and different chains for DeFi. And what we want to accomplish is that anyone with Bitcoin who should be able to invest it or take loans or participate in finance without having like bridge risk or custody risk or any of the traditional risks. So we want to take $1 trillion of Bitcoin and make it safely usable in investment to earn yields. And so that's the long-term goal. We do this by launching in DeFi and, Ethereum, Arbitrum Base, Solana next, things like that. And then in the long term, I think institutions can play a role, like the BlackRock ETFs could have dlcBTC can enable them to have ETFs that generate yield. And so, all traditional finance can use this as well. So anyone who, has Bitcoin should be able to use dlcBTC to safely use, finance from it.
How does this pack differ from the existing WBTCs? One of the big selling points of the dlcBTC is its decentralizations. So could you talk us through how the dlcBTC is more decentralized and secure than WBTC?
Sure. So there are two current models for wrapping Bitcoin. One is to send it to one custodian. That's WBTC, FBTC with Kobo, BTCB with Binance, CBBTC with Coinbase. That's a popular method. Sent to one custodian. They hold the Bitcoin. The problem is if something happens to the custodian, the Bitcoin could be gone, and it could be a hack or a business. There could be a legislation, but anyway, Bitcoin is in one place. If something happens, it can be gone. The other approach is to send it to a bridge like TBTC or BitLayer, all the Bitcoin L2s, where you send it to a collection of nodes and they hold the Bitcoin. The problem there is you're not on Bitcoin security. You're on TBTC security, which might be okay for you, but it's not Bitcoin. Bitcoin, the whole point is the large mining network securing it. So we have invented a third category we call self-wrapping, where we use a mechanism that already exists in Bitcoin called the discrete log contract, which is kind of like the only smart contract you actually have in Bitcoin. It was added 3 years ago with Taproot and actually invented 6 years ago at MIT by the creator of the Lightning Network. And so we use Bitcoin Chain to secure the Bitcoin in a more decentralized way using this mechanism. And so basically self-wrapping is our depositors lock Bitcoin with themselves. And it's a theft-proof system. Only the original depositor can ever get the Bitcoin. And that DLC is secured by the entire Bitcoin chain. So that's how I think this can bring additional, especially institutional liquidity into DeFi.
We have all heard the recent news that BitGo, Justin Sun, and the Tron ecosystems are joining forces to operate WBTC. So what's your take on that?
Yeah, this is a kind of centralization risk. So BitGo made the decision to sell WBTC to Justin Sun and affiliated companies. And that's something that, a centralized decision maker can do. And so, of course, now, as a result, they have been removed from Maker. There's discussions to maybe remove them from Aave, maybe not. We'll see. But, centralization could mean like they are at risk of a hack, or it could mean just a business decision, like one central, like a dictator, right, of a country making a decision. And that decision might not be the best for the ecosystem. And I think that's what we're seeing with WBTC. And I think there's a potential with any centralized wrap Bitcoin for that. I mean, people buy Bitcoin because of the security and the decentralization. So it just doesn't make sense to me to trust any single centralized party. I just don't see why that would work in the long term.
Okay, so and finally, what's next for you guys? What's your long-term visions for the dlcBTC?
Yeah, I mean, we want to launch dlcBTC on every chain that has DeFi. So we're kind of going chain by chain. On each chain, we also have to build liquidity. We're still early on, so we are still building out our merchant network. These are the institutions that can participate. We're also plugging into some DeFi protocols and different pools in more flexible ways. We just integrated with Garden Finance. So now anyone can swap BTC to dlcBTC through Garden Finance. So there's a lot of kind of integrations we are doing. But yeah, basically, build more liquidity, list in more DeFi protocols, launch on more chains. We're just going to be kind of doing that over and over. And the goal is to get more institutional participation as the institutions start to see that this is something that they can use and that they, that can really safely open up Bitcoin liquidity for them. I think, they're going to find it more interesting to deposit in and use the system.
Thank you so much, Aki, for sharing your incredible journeys and for giving us such deep insights into the dlcBTC. This project not only highlights innovations in the Bitcoin space, but also points towards a more decentralized defense future. So we are excited to see where the dlcBTC goes from here. Thank you.